Hi there, I'm Dean Heskin, President and CEO of Swiss America Trading, and you are tuned into our podcast, The Secret War on Cash, where we take a in-depth look at some of the changing dynamics in our financial markets and our economy. Let me start off by saying Happy New Year to everyone. I hope you had a great, happy, and safe New Year, and looking forward to a very prosperous as well as, let's say, blessed and abundant, we'll call it 2026. I have with me my co-host, Chris Agelastos, here today. Chris, Happy New Year to you as well. I hope your New Year and your holidays were fantastic.
Yeah, it was a nice break, and here we are about a week into the new year, and it's already going amazingly well. So that's a good sign. Let's keep it going.
It is interesting you say that because, like, basically a week from tomorrow, we are halfway through January, basically. I mean, we
I know
just
it's
start the
nuts.
new year. We are halfway through January
Flying by
already.
again. Yep.
Well, a lot's been happening, even though we've had a few days where the market has we've had a break, and we weren't actually we had our offices closed a few days during the holidays. The This first article that we'll look at here I find to be very, very interesting, and interesting from the standpoint that I would venture to guess for the investment public, by and large, the majority of people out there aren't even aware of this. And the reason I say that is because most people in the investment world, they have stocks, bonds, mutual funds, annuities, things of that nature, all obviously good investments, and they all have their place in a portfolio. But you have gold was the better investment. The title of this first article here from Watcher Guru.
Hmm.
25-year data shows it beat the S&P 500. Okay.
Yep.
So when you look at that, Chris, my first thought or question I would have for the average person, of those people tuned in, if in the last 25 years gold has outperformed the S&P 500, your financial advisor, your portfolio manager, wealth manager, whomever it might be, have they talked to you about owning gold? Now, I know in recent years that changed. In fact, a lot of it changed, as you're well aware, Chris, when they start what the Wall Street's answer to people who were all of a sudden waking up to the fact, wait a minute, gold prices are going up here, I should buy gold. That's when ETFs were basically birthed. It gave Wall Street the ability to, even when a client called and said, hey, I want to buy gold, instead of actually doing what they should do, in my opinion, which is get physical gold, they were kind of directed towards ETFs. And
Yep.
prior to the advent of ETFs, if you asked your investment advisor about gold, they would probably, not probably, they did, have been doing this for 33 years now. They would direct you towards gold funds, gold
Hmm.
mining shares, maybe even some options contracts, depending, or futures contracts, depending upon what your investment expertise is. But I just find it so fascinating that you have these kind of numbers, and yet the percentage of people who even today have gold in their portfolio is very, very low. So how could
Yep.
people see this, and if they have seen it,
Yeah.
and not take a hard look at, okay, why don't I have gold in their portfolio? How can that even happen, Chris?
Right. Well, I think one of the challenges, if you will, with getting in front of people is simply that gold is not a flashy performer, meaning it's slow and steady. So it's done a great job over the last 25 years, and it's beat the S&P 500 by quite a bit. I mean, the numbers they're using in here show a 17 times increase in the last 25 years for gold versus a five-time increase for S&P 500. But S&P 500 gets all the news, and it has some years where it has bigger flashy gains, but then it also can have some very significant dips. And the old saying, right, slow and steady wins the race. That's what gold has done here. So it doesn't get a lot of the hype. It's a good, solid performer. It's generally regarded as one of the safest assets that you can physically own, and it does well over time. But it doesn't get those same flashy headlines that we see from the stock market every morning when we turn on the financial news.
Well, and I do know, like, again, in being in the investment world and business for as many years as I have, I do know the counter argument to this is the S&P 500. It's you're talking about a broad average or index of 500 stocks. So some of them are
Hmm.
pulling down the average, not doing as well as the others, et cetera. And I guess statistically or mathematically, you could make some kind of an argument for that. However, the reason that the S&P 500 exists is that the investment world believes it to be a very good indicator as to where the market sentiment and the market direction is going. So
Yeah.
just because it's less favorable in comparison to gold, the only time they'll discount the use of this average by and large is in a situation like this when it's being compared to gold. And the
Hmm.
converse to this, which we've talked about in other podcasts, then people will say, okay, well, compare it to the Dow. And the challenge with the Dow is it's a much more limited pool of stocks, and the ones that underperform, they really don't throw anything out that I'm aware of ever for overperforming. They only throw
No.
out for underperformance.
Right.
And so even if you were to use it in comparison to that, that's not really, an accurate depiction either, because it's a in my opinion, it's a manipulated average. And even back when I
Yeah.
was in my investment banking side of my career, I used to tell people that. I mean, it's not really a fair or accurate reflection because of the it's kind of the walls and the floors are constantly moving. So
That's right.
another interesting thing they talk about in here is the fact that silver, they believe, could nearly double quickly, like this
Yep.
year. And it just speaks to the fact that there's already, in fact, you saw the part in this article, I know, Chris, where it's interesting. We're talking 25 years. It has beat the S&P 500. And in this article, the investment world, I'll read it here actually. The asset has now been touted as, quote, the breakout asset of 2025. Okay,
Yeah.
great. But what what about all those other years? Like breakout
Yeah.
asset. Like
Right.
it's been doing this for quite a few years. And
Yep.
it looks like as in fact, the price increase, if you compare the two, in the price of gold in the last 25 years has had a 17-fold increase,
Hmm.
whereas the S&P 500 has a little less than 5 times.
Yeah.
So it's not like this was like a photo finish or anything like that. I
No.
mean, this is like a
Yeah.
this is like Mike Tyson in his early years. This was like a
Right.
30-second boxing
Yeah.
match. So, or anyway, bout. So anyway, I mean, I think it just speaks to the fact that what I like is, like, look at what it's done historically. But for those who are sitting on the fence or have yet to get involved in metals, they're saying this is just it's really only just begun. It's like only going to continue from here.
Yeah,
So
they literally stated in there, there's no signs of it slowing down, and they fully expect, gold over 5,000 and silver in the 115 to $120 range, conservatively speaking, this year. So there's still a lot of room to go.
but it's happening due to investment pressures. It's happening due to industrial pressures, meaning people
Hmm.
buying. It's happening due to central bank buying. But let's get into our second article here off of from CNBC. How gold hits 1 week high after U.S. strikes in Venezuela.
Hmm.
And this is what they refer to in this article as, quote, safe haven demand. So whenever times of trouble, or in this case where you've got like basically war, you have people looking at this as a safe haven. And that's, I guess, what I'm
Yep.
trying to get at here is that, again, the reasons that are kind of propelling metals prices higher, they're not getting better, if you will. They're getting worse in terms of some of the situations out there, but better for people who are invested in metals.
Yeah. Well, you have many others, including the previous article, talking about really a global reset of the financial system coming up in the near future here. And gold has always carried a major role in financial systems since the beginning of time. So it's definitely a big player. And when you add to the geopolitical concerns, like what we saw here in Venezuela, and maybe what we're going to see in other South American nations. I mean, the last couple of days, President Trump has been pretty vocal about the fact that we're not going to just sit by and allow drugs to flow into our country. And if we need to get more aggressive and sort of take some people out, if you will, or at least remove them from power to make changes, that's what he's willing to do. So add to that the low interest rate environment we have, the economic data here in the U.S. pointing to slower hiring rates, and slower job growth, and things like that. It's just more and more reason to put some of your money into physical gold and silver. I mean, imagine, like we were talking in the previous article, if you had a good chunk in the S&P 500 and a good chunk in physical gold and silver, amongst maybe some other things that you like, how great your last 25 years would have looked overall, being in those asset classes.
Well, another thing I'll add to this for those tuned in and who've not maybe perhaps had any prior or previous experience with owning metals. As much as people might say, okay, you're comparing these averages where, some things are doing better than other, and that's an average, whereas gold is just gold. There is a critical component to that. And that is, like, when you're involved in equities and, have a wealth advisor or a manager or a broker that you're using, typically speaking, let's just take over the course of 25 years. More than likely, there is a lot of reshuffling that's taking place in your portfolio. And what I mean is, like, your broker calling you up and saying, hey, we're not doing too well with this, but I think we could do better with this. Sometimes maybe doing some buying and selling for tax reasons, or moving it for performance reasons and things of that nature, all of which costing money. And again, by utilizing or looking at just the average alone, it's something that, has not performed as well as gold. But the key with gold, in that 25-year period, ladies and gentlemen, you didn't have to do anything with it. You bought it for diversification. You bought it as a hedge. You just bought it, put it away, and without having to do a thing, without having to talk to your broker at Swiss America or whatever, we encourage you to talk to them. But even if you didn't, it did a 17-fold increase without you having to change a thing. And that's a key difference as well, because even though, yes, it's the comparison is something that is an interchangeable average versus we'll call it a static asset of sorts. Give me static with a 17-fold increase versus interchangeable average with a 5-fold increase all day long. So if you'd like to learn more about this, ladies and gentlemen, you'll see in our show description where you can contact us via phone at 1-800-289-2646. You may also text us there. You can even visit us also visit us online at www.swissamerica.com. For those of you who have already subscribed to our podcast, we thank you for that. And if you have not subscribed yet, we encourage you to do so, as we look forward to talking to you more in the future. Have a great day. Have a great rest of your week. And we look forward to talking to you again real soon.
Take care.